first, and then if you guys actually have any other topics or questions that you want to cover, feel free to put that in the chat, and then we'll actually talk about that as well. But this class won't be too long, just like a quick one, so nothing too crazy. But yeah, we're gonna first talk about what Chin mentioned is how I actually draw my patterns, right? So obviously the first thing that we need to have is going to be we need to have an understanding of what continuation patterns are or what reversal patterns actually are, right? So the best way to do that is if you go to the SS Academy section and go to the patterns tab. Let me also change my screen that we could just see this. That way you don't have to look. So if we go to the SS Academy tab, right, and then we go all the way up to the patterns. There's a lot in here. Okay, so I'll be using this little cheat sheet right here, right? So this is a reversal slash continuation pattern cheat sheet, right? And you guys should already have a pretty good idea of most of these, correct? Like these are pretty basic patterns that we look at literally on a day-to-day basis. Um, Now, what a lot of people actually don't know is the reason why they're actually called continuation patterns. So the main reason why they're called continuation patterns is because, one, obviously they're going to continue off of its previous move. But a lot of times they'll actually replicate the exact move that it made from, the previous, push up or push down, depending on, where you're looking at. But we're going to take a look at this continuation pattern here. So what type of pattern is this, guys, that I'm looking at right here? If I were to just draw this out, this would probably be
Just a
a bear
bear
flag,
flag.
right? Yeah,
Yeah, yeah.
right. And then how would you guys do this, right? So before I draw this out, I want you guys to come to this exact chart or exact timestamp that I'm at on a 5 minute. So this is about 6 o'clock, and I want you to draw it how I want you to draw how you initially would draw it without me drawing it first. So I want you guys to go to your charts, draw it out, and then post a picture of how you would draw it in the main chat. And then we'll do a little bit of a comparison. So I'll give you guys a couple of minutes to do that. Yeah, so come to this exact timestamp here, right about 6 a.m. today. Yeah, that's today. Yeah, 6 a.m. today. And I want you to draw out this kind of continuation pattern or bear flag. Post it in the chat, and let's see if, our drawings look relatively similar.
With the pose or just
Yeah,
the
with the poles, the actual flag
pose?
itself. Yep.
Yeah. Okay.
Let's take a look. Okay. And then, Chin, how would you draw your actual um, flag pole, I guess? Like, so if you guys had, this continuation pattern, right? Also, let me know where would you draw your actual targets? How would you draw your targets and what would, where would that area line up with? How would you be able to determine your targets? You could talk in chat or you could type it out. So if you've seen this, how can you determine your targets in your eyes? Anyone?
No, I
Uh,
thought you were talking to
I,
Chen.
I will go first.
Okay,
Okay.
cool.
So the reason I draw the trend line like this is that on 620, we
Okay.
have the big push up of the green candle,
Yep.
620.
Hmm.
Okay, and then and then it start to form the uh high low on the doji candle, which is on 645.
Hmm.
Yeah, and then I connect these 2 points and extend it. On the top, uh, I use the 630 candle, which is the
630.
green candle push up.
Yep. I
And
see that.
I didn't take the next one, the doji one, because the doji one means indecisive, and the people we don't actually know it's going up or down, so
Mm.
I ignore that.
Yep.
And then I take the final 715 candle on the upper wick because that is the highest point
Okay.
before potential go down.
Yep.
And then my target is actually the size between the movement between 620 to 630, which is the
I see
two
that.
green candle. Yeah.
Okay. So why would you so why is that your target? Like, so where did I'm just curious, where did you like hear that from?
Uh, so yes, that's what I learned. Okay, and
Hmm.
if you look at the a picture I post in the chart, and on the on 720, you have a yellow line there. Okay, that is basically the movement of that two candles. So I move to the breakdown area. So when it start to break down, minimum it will go to the end of the yellow line, which is 18 18534.
Hmm.
Is that
Okay. No, no,
is
I
that
get that.
clear?
I got it.
Yeah.
Cool. Okay. All right, Carlos, so what about you?
Well, I usually start by identifying the top and bottom of the flag,
Okay.
and I always try to connect as many candles as I can. I mean, connect the wicks, but I won't go into the candle body with the trend line. Yeah, that's what I try.
And then what about your flagpole? Did you kind of just draw the line to like wherever, or how did you
I
do
try
it?
to identify the top of the swing, I guess,
Okay.
to the bottom, and copy and paste the flagpole and put it like where the breakout is coming.
Okay. So you said you would draw it from the top of the swing. So why wouldn't you draw it from, a little bit more to the left, right at like 18,650? Why would you draw it from right there?
Yeah, because in that region, I figured it's like a bull flag,
Hmm.
but we were consolidating there, and I don't know, I just liked it more there.
Okay.
I'm not sure why exactly, but yeah.
All right. Yeah, that's fine. Well, I think both of your guys' drawings are actually okay. But yeah, this is where a lot of people start making mistakes, is that they don't really have a good idea of, oh, say, sorry, Raul also had one too. Um, so Raul, that actually can be correct in terms of the way you drew it. That would actually kind of work as, I guess, almost a larger structure. But for me, we're looking a little bit more on the smaller time frame here. So we're not looking for this bigger one. But either way, there would still be an initiative of some type of breakout once we did get this clear below 75. So um, yeah, that's definitely not wrong, but that probably isn't really what I'm looking for. But yeah, like I said, the way people get confused is gonna be, you know, yes, they could identify the flag, right? So I know you guys drew it like this, right? And either one of these ways of drawing it is gonna be fine, right? But like Carlos says, right? For me, when I draw the flag, I'm looking for the most taps within, the structure. So here we could see it's a clear higher low structure with this flag. So we have a low here, we have a higher low, higher low, right? And then here we have almost the same structure. We kind of have a low with this body here, higher low, and then almost a higher low here as well. But in reality, this really is just a flat top here, right? Because if I were to literally just draw a line here, we actually see that I actually have a line right here. So this is actually previous high of day. So this would actually line up really, really nicely, right? We're stuck in between almost two major pivot points. So we have a previous high of day level right here, and then we have VWAP sitting right below us. So this area right here is going to be our actual range to break out of, right? Because obviously if we got above previous high of day, that would be invalidation of the bull flag. And then obviously if we got a break below VWAP, that would be a clear kind of break of structure. And then if we got below this lower trend line as well, this would also be a break of structure, right? But like I said, the way you can draw the upper trend line can really vary depending on, what levels you have, around us. So maybe, if VWAP was above us, you could use that as potential stops and whatnot. But the way I would draw this, because if I were to just place a straight line that goes straight across, you could see we have a tap here, a tap here, with the way the candles line up, a tap with the wick, body tap, body close, and we have some more wicks right here. So I would actually just draw this as a flat base right here, because if, like I said, if you draw a straight line across, right, you would get multiple taps there. So that would be that, right? But this is where people start making the mistake, is that they don't really know how to identify or even draw the pole, right? Yes, there's multiple ways you could do it, but the way I'm going to show you guys is probably going to be the most successful way that I found. Because right, when you're drawing the pole, you're like, okay, maybe I'll start from this high, to down there, or maybe that doesn't look right, right? Maybe I'll draw it from here or here or here, right? But the reason why I'm talking about this is because what I mentioned previously with the continuation patterns, right? Why is it called a continuation pattern? Well, it's called a continuation pattern because it's a lot of times it usually replicates its previous impulse move down, right? So technically, we actually want to go a little bit more. We want to kind of like look a little bit deeper into this, right? We don't really want to pay attention to anything that kind of happened up here, right? We want to focus on where the actual initiation of the actual flagpole was. So if we actually look, where does technically the flagpole start? Well, the flagpole actually should start right here. Why is that? The reason why that is because this is the first, one directional move, right? Because when we look at a flagpole, right, we should have one single directional move, some type of base, and then, the follow through, right? It's called rally base rally, right? Same exact thing here, right? Yes, we have a little bit of a decline here, right? But what's kind of going on in this section here, right? We're getting a little bit of almost choppiness, right? Or it's not as clean, right? It's not a one directional move, right? We're kind of going down, up, down, up, down, up, down, up, down, up, right? So it's not really one directional. So it's not technically a rally base rally. So where is our rally base rally starting from? Our rally base rally starts from this candle right here, right? As this will be the start of our one directional move. Notice, right? You have one, two, and three consecutive candles, right? And this right here is going to be the start of how we would actually draw our flagpole. Okay. So when we draw the flagpole, right, we want to make sure we always connect it from body to body, right? Why is that? Well, Ton said this previously, right? The wicks cause the damage and the bodies tell the story, right? So if we draw it from body to body, we know for a fact that this is the actual move that was captured during, this downtrend right here, right? Body to body is showing us the actual move that happened, whereas, like I said, right, the wicks cause the damage, right? You could have a wick that literally can come all the way, up here at one point, but does it make sense for you to draw a flagpole all the way at the top here if we actually closed down here? Realistically, probably not, right? So that's pretty much the main reason why we would actually draw it from body to body. So let's do that right now. And like I said, when we draw this, we're only really looking for impulse move or just the initial rally itself. So how would we draw that? We would draw it from the high of this candle right here, or the close of this candle, to the lowest close, which is going to be right here. And now you guys can see that, right? So this is how I would draw my flagpole right here. And then now what would I do? Now I'd duplicate this and I literally just bring it straight to the end, right? And this right here would be my actual bear flag setup. In terms of the 5-minute structure, right? This is all going to also be dependent on what time frame you're actually going to be looking at this on. So in this case, if you are trading a 5-minute setup, this level right here is going to be your first target, right? So this level right here is going to be your first target. And you could see this also lines up with a very, very nice, right, previous demand or support region right here. And you can see, oops, right, very, very nice spot for at least to take some profit off, right? And like I said, this is based off of a 5-minute structure, but, right, looking at the structure by itself, this definitely looks like it could be a little bit bigger, right? So it all depends on the perspective in which you're trading, this continuation pattern from. So like I said, in this case, right, this is going to be a 5-minute structure here. Um, but let's switch over to maybe the 15-minute time frame here. Might look a little bit better. Maybe not the 15. How about 10-minute? Okay, yeah, 10-minute structure actually is the same thing, but it looks like our flagpole actually gets a little bit more extended here. Obviously, we see that we did, kind of continue a lot lower. But remember, at the same time, right, you're also not looking to capture every single, move, right? You capture where your initial targets was. So heading back to this 5-minute structure, how would we actually look for entry? So as you guys know me, right, I'm all about reversal trading, right? And I'm all about the R to R when it comes to a trade. So how do I determine my entry? Well, just looking at this, right? For me, I always like to take my entries at the top of the trend line when it comes to, just some type of bear flag, right? So I'll have my entry at the top. So yes, it is an earlier entry, right? But that overall actually increases our R to R. So let me actually switch screens here to trading view. That way you guys can have a little bit more of a better visual of actually what I'm talking about with the R to R. Just give me 1 second here. Okay, so we're going back to that same structure. Let me draw this out, kind of like this. And then, like I said, we're drawing body to body. And then we have the duplicated flagpole that gets brought down, kind of like that, right? So, right, how do we determine our entry, like I said? So, as I mentioned previously, we do also have overnight high level sitting pretty much right on top of us. So I'm also going to mark that out with a red line. I believe it was like right about there or something like that. Okay, so we have our previous high of day here. We have VWAP sitting right below us, right? How do we determine our actual entry? Well, one, literally if we just go to the replay bar, you technically can already see some type of structure forming, right? Um, One, you could see that there is a clear basing at this top here, and you can see a clear higher low. So a lot of times, like I said, what I'll look for is I'll look to take a short entry on the back test of this trend line here. So my entry will be right about here, right, for my entry. So now how do we determine our stops? How do we determine our targets? So like I said, there's a couple of different methods which you could, look for your actual targets. But in this case, we're really just going to use the duplicated flagpole. But, this really isn't the only thing that you really want to rely on. You do want to use other, external confluences as well, just because, if you're using just a duplicated flagpole, there really isn't a whole lot kind of going for you, as you could be potentially, giving up some of those actual profits that you're using here. So technically to actually start, this should be the bare minimum that we should actually look for. Yes, we can continue lower, but a lot of times this should be usually the bare minimum of which we should look for our final target. So then from there, right, we'll get our back test. Boom, right there. This wick right here would be our entry, and then our stop loss would be, just a break above this level here. So yeah, this is our R to R in play. Like I said, we have our take profits at the low, right? We see that this was also a previous kind of like the little demand zone over here. So, right, down to this 18,537, this definitely isn't, a bad spot to be taking profit, as this would pretty much give us a, 1 to about 2.5 R to R, depending on, what your stops are. But let's take a look at kind of how that follows through. So yes, 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 and then this would be your confirmation candle that we would most likely see lower, as this candle here did get that break of structure, right? We got a 5-minute candle close below that previous higher low. But for me, a little bit more confluence would be if we actually ended up getting the break below VWAP right there. But yeah, like I said, right, your stops are going to be a 5-minute candle close above either this upper trend line, right, as this would invalidate the bear flag setup, because you could see, right, we are currently respecting that. We are respecting it, so a candle close above it would be an invalidation of the setup, and then you would obviously, get stopped out. So technically, right, your risk here can vary. Um, but I mean, you see, right, what ended up happening, because if you use hard stops, these are some things that can happen, right? We see that we did actually end up pulling up above that upper trend line. And if you had a hard stop, you would have gotten wicked out right there, and then the move would have happened without you. And that's actually something that happened to us yesterday when we were in our short position. All right, I was too quick to actually move my stop loss to break even. And then what ended up happening, we ended up getting wicked out yesterday for break even, and then we got the move after that. So that's also another reason why I always go by the 5-minute candle closes, as a close would definitely confirm that, okay, this area is no longer going to be used as, a resistance, and most likely will flip to support. Because as you can see here, right, if we drew this line across, how are we initially using this level here? We are using this initially as resistance, right, on this wick up. Resistance ended up getting broken, flip to support, flip to support, it got broken, and then now what was once support then flipped to resistance, right? So it would be the same exact thing. If we ended up getting a candle close above this, this would this initial resistance now right here would be then flipped to support. So yeah, like I said, right, stops would be a 5-minute candle close above either one, this trend line, or this level right here. Me personally, I would go by the red level, as that would be our actual previous high of day. So that would definitely be a confirmation that, we could see a potential shift in structure towards the upside if we did get that candle close above there. And then, like I said, our targets can be the end of the duplicated flagpole, which is going to be about here. And like I said, this is about a 1 to 2, almost 3 R to R, depending on, where your actual stop is. But yeah, that's exactly how I would do this. If you were looking to take, partials or even trims, right, where could you look to do so? For me, if I was in this trade, you could definitely take your initial partial at VWAP, the top of VWAP, and that would be for about 30 points right there. And then if you wanted to close half right there, you would let the other half ride down to your final target, which is going to be at 37 for about 50 points there. And that would be that trade breakdown. Now, like I said, the reasoning why I actually take my trade on the actual top of the trend line is going to be because the R to R is going to be a lot better, right? Because technically, the way you're supposed to play these patterns is that you're supposed to play the breakout, right? So this candle right here, technically, All right, yeah. So this candle right here would be your initial entry, right? So let's just do that for example. So let's just say we ended up playing the entry, which is right here, and then maybe we took an entry on a bit of a back test, a smaller back test. Yes, your initial target still would hit, but your actual R to R increases, in my opinion, right? Now, why would I say it increases? Well, for me, the reason the R to R increases or decreases, sorry, um, is because if this setup was to technically reverse here, would the setup still be valid? And the question or the answer to that question is actually going to be yes, as if we, like I said, the way these, drawings are made, they can be adjusted very easily, right? As long as it looks correct, it most likely is, right? So technically, there is no right or wrong way for you to actually draw this. As long as the structure holds, you technically can actually continue to hold the setup. So, in this case here, if you took an entry on this initial breakout and we were to pull up, maybe back to this 580 level, right? We are technically still holding inside of this bear flagging structure. So is it reasonable enough for you to actually close the position? And in my opinion, no, right? Just because the setup is still valid. Um, like I said, an invalidation of the setup is going to be where? An invalidation of the setup is going to be a break above previous high of day, as that would definitely be some type of market structure shift, as we would have broken above this previous resistance right here. Whereas if you played the breakout and we kind of just pulled above, right, you're probably going to be bound about like 10 20 points, and the setup is still valid, and your overall risk is going to be increasing probably to about 50 or even 60 plus points, depending on how you're running your stops there. So, like you said, or like I said, right, your R to R definitely goes down. So it literally went from a 1 to almost 3 R to R to literally a 1 to 1 if you're playing the breakout. Like I said, if you just take that slightly earlier entry, yes, there is going to be a little bit less confluence within the trade, but like I said, your R to R increases and your profitability is going to be a little bit higher, in my opinion, as you most likely will be able to move your stops to break even, right? Because the second you get your initial trim wherever it is, right, you could actually mitigate your risk as quickly as possible, and you can, get out for a risk-free trade, right? So even if this candle actually ended up closing below this lower trend line and it ended up pulling back up, you're still going to be in profit, right? Whereas if you took that entry on the breakout, you're going to be down, right? So that's kind of the power of R to R right there, right? Your R to R can increase very, very fast if you have the correct entry, right? And like I said, if you do have that correct entry, you're going to be able to mitigate your risk as quickly as possible just by moving your stop loss to break even there. So yeah, if you took your entry here, right, you could play it, I don't know, write it down to maybe this previous low right here, or the previous low wick or VWAP, right? The second you hit your first initial trim, right, you close half of your position here, stop loss to break even or in profit. Now you have a risk-free trade if you're looking to hold the rest of this move for your final target. Does this all make sense?
Alex, can I ask question here?
Yep.
My first question is that I understand what you just said, and I also understand that you don't operate the hard stop loss
Yep.
most of time because you want to see whether the structure hold or not.
Hmm.
And my question to you is that how do you actually uh how to say this? Is there any chance? So let's just look at the chart, okay? And on the top of the trend line, you just draw, okay? Is it possible that unless it's a new state, is it possible that the the candle will just move all the way up to 18650, for example, and
One eight.
within matter of 5 minutes?
Oh, like
Because
up to this high.
it, yeah, the reason I'm saying that is that I uh I understand the importance not
Forgot
to
to
set.
remind you that I did order pizza. So if you want,
You go
All
ahead.
right.
Your mic's unmuted.
Sorry, can I continue or?
Yeah, continue. Good. I'll mute it.
Yeah, sorry. So I guess my question is really about a dilemma. Okay, so
Mm-hmm.
let's say even you size properly, but if the candle just move all the way back up to 18650 within matter of 5 minutes,
Mm-hmm.
then that trade basically wipe out your entire week's profit. And
Yeah.
that's why I when I look at the stop loss, I'm just thinking how much I'm willing to lose.
Mm-hmm.
And but obviously it can be week out, and just like what we did yesterday.
Yeah.
And that's my first question. My second question is that you mentioned that you will take the entry on the near the top of trend line.
Mm-hmm.
Okay, so do you really just use the limit order or you just use market order
Either one.
when the price go there?
Yeah.
Sorry.
Yeah, so
Yeah.
with the entry there, you could obviously have a limit order. But most of the time I will look to do market order, as you could see, right? Um, yes, even if you have a limit order, sometimes you could actually sometimes get a little bit of a better fill. You see how with these wicks right here, we've actually pushed up, a little bit above that level. So actually being
Mhm.
able to get your entry, all the way up here is going to be a whole lot better actually, as obviously, right? Your risk will
Yeah.
technically decrease, right? So just by getting, a 5, 10 point um, difference, right? That can be a lot, right? And which is why I say when you take your entries are literally going to be everything when it comes to your trade. So most of the time, right, I will be watching it, but it's usually, going to be within the general area of the upper trend line. So roughly about here would be my entry, somewhere within that
Mhm.
region. Um,
Okay.
Now, in terms of the actual stops, right? Yes, that can happen, but realistically, is that going to happen like that, right? Um, Chances are, right, you're not gonna get hit with like a move like this within a single candle. Like, I mean, let's just say we did the opposite, right? We did the opposite of this candle right here, right? And we brought it up. So let's just say we're gonna go based off the previous close, which is gonna be literally right
Mhm.
here. So this would actually be your stop right here, as right, I literally just duplicated the previous candle and just moved it back
Mhm.
up. So yeah, technically the candle would have closed right here, which would have been about 601. So your risk there would have been about 20 points. So like I said, the
Mhm.
second that candle closes above, your stop level, right, you're gonna get out, right? You're not waiting for, oh, maybe a back test into here. We could, continue because chances are when that structure, once we get that break of structure, yes, we may get a back test, right? And that's usually a lot of times what we'll get. We'll get a back test, but chances are we're most likely going to continue after that. It's the same exact way with, the other way around. You see it happen pretty much perfectly, right? We see that we got that break of structure right here with that candle close lower. What happened? We got the back test into the trend line right here, which was then used as resistance, right? Was once support, then got flipped to resistance, and then we continued on, right? And that's just simple price action right there. Does that make sense?
Yes. Thank
Cool,
you.
cool, cool. Yeah, and then, if you really wanted to, you can set a hard stop just as a safety net in case, you're holding through data or something like that. But chances are when you are holding through data, right, that's probably not a good idea, especially if you're worried about the risk, because, with data, right, we'll get those crazy, crazy pops and then we'll just immediately get bought back down, right? Or even quite the opposite, right? We'll just get a straight one directional move, which will literally just run straight through your stop. So those are some things you do want to be careful of if you are trading these patterns through data and actually holding them through data, which is why, right, most of the times we don't really trade data, right? So that will that'll pretty much be that. Does that make sense?
Yes. Thank
Cool, cool,
you.
cool. And I know Raul had a question. Yeah, so with QQQ and NQ, they literally are the exact same thing. Uh, in all honesty, right? It's really no difference. So if we literally just pulled up a QQQ chart and an NQ chart, pull up the same exact time frame here. Go to the 5 minute. Chances are it's going to be the same exact thing. All right, but in this case, this was during the overnight session, aka 6 a.m. for us. So, like I said, it's going to be the same exact thing, right? Same exact structure, just a different scale and a different size in terms of its overall price, right? These are at exact same mirror of each other. The only thing that's really going to be different is where the actual overall indicators are going to be, right? Um, which is going to be VWAP for the most part, right? That's one thing that you'll see me point out quite often is that, okay, VWAP, we ended up tapping off VWAP on QQQ, but we still have yet to tap off VWAP on NQ. And a lot of times that really is just going to be the biggest difference between looking at, these two structures here. But overall, in terms of the actual um, charting and what we're looking at, they're going to be the exact same thing. Okay, cool, cool, cool. So did anyone have any questions on that? How would you get entry and exit price? Well, that's kind of what I just covered, right? With that previous flag. Oh, on NQ from QQQ. So, like I said, it's going to be the same exact thing. So, all right, we have our flagpole right here. We have our flag drawing. All right, it's going to be pretty much the exact same thing. They should line up at the same spot. So if I were to just duplicate this, clone it, move it to the end, duplicate this, clone it, and move it to the end, right? It should line up literally pretty much right at the low of the second candle, which it does perfectly right here. You can see that. Cool. Yeah, so you would clone pretty much the drawing, but like I said, if you're looking at, a QQQ chart, you could still take an NQ position without even having to actually look at an NQ chart. 'Cause like I said, they're literally the exact same move. And actually, this setup right here would be a lot better of a confluence looking at it on QQQ. Why? It's because we're actually sitting below VWAP right here. So VWAP is this red line. So this would actually be a triple confluence as a market structure shift, as we had previous high of day sitting right here. We have VWAP sitting right here, and we also have this upper trend line. So right, a break above, these levels right here is definitely going to indicate that there is some type of market structure shift going to be coming in here. So this would definitely 100% invalidate the setup. But at the same time, this also gives a great R to R and great confluence for our trade as right we could be like, okay, we're entering off of a upper trend line bear flag resistance. We're entering off a back test of VWAP, which we are sitting below, and we're also entering off the back test of previous high of day, which means that we are sitting back inside of an inside day. So because we're back inside of an inside day, we could expect to trade inside of yesterday's ranges, which means that we should theoretically pull down. Does that make sense?
Yeah, you could also draw FIP
Yeah, yeah, you
from
could
the
draw a
start
fib
of
from
the
the high,
pole.
yeah.
Yeah.
Right. Another confluence right there. Fib drawing, right? Small 5 minute structure right here, right? This would 100%, invalidate the setup if you got above that. And on top of that, you have great confluence for a move down, right? So this is technically an A plus setup for me, right? Multi-confirmation setup. You even have some imbalances, previous 5 minute fair value gap right here, depending on where your entry was, right? Maybe got somewhat close to a halfway fill on this wick, right? This is another great confluence for us to reject here. So, we're combining a lot of different factors within our trade, which allows us to rate our setup whether or not this is going to be a, A plus setup, a B setup, a C setup, right? The more confluences we have, the better. Um, and if we have an A plus setup, that should give us the confidence to say that, hey, everything is telling me that, okay, we should see, more downside here. But yeah, that is pretty much that. Any questions besides that? I think all that makes sense for the most part. Um, wow, we spent a lot of time on that. I didn't realize it's 12:15 already. Okay, well, I guess we'll continue on with I guess continuation patterns if that's the topic that we're on. But does anyone have any other setups that they would probably like to take a look at? Maybe, well, let's go take a look at that inverse
Maybe on
McDonald's
the
pattern.
inverse McDonald's.
Yeah. I forget where that was at though.
I think it was start of the week. I'm not sure.
Yeah, I'm trying to figure that out as well. That was Monday. Yeah, I did not remember where that was at. It was a day where we pumped. I think we like took a little bit of a dip one day and then
It was on August 5th. Yeah,
on the 5th.
when we yeah August 5th.
Oh, is it this right here?
That was the first one, and the second one is a few days later.
Yeah, let me go take a look at that actually. Inverse McDonald's. Okay, I see that, yeah. So that was Tuesday. I believe it was like right here, I think.
It was Monday overnight.
Monday overnight.
Yeah, Monday 5th. Yeah. It was before market open.
What time
Yeah,
do we
this
hit?
one. Yeah, I mean this one. What do you have on the screen? This big structure.
Oh, okay, okay, okay. So it was a 30-minute structure. Okay, I was looking, I was like,
Yeah.
it's kind of hard to see. Okay, we'll flip to the 30-minute. Ah, there we go. That looks a lot better. Cool. Yeah, that looks a lot better. Yeah, so we have, I mean, we could do pretty much the same exact thing on either one of these candles here, but pretty easy overall to actually draw. So first you want to identify the inverse McDonald setup, which would be right here, aka the W pattern or whatever you want to call it. You want to first identify the overall breakout level, right, which would be pretty much at the neckline, which is going to be here. On top of that, you also have a previous 5-minute imbalance or 30-minute imbalance, sorry, sitting overhead of us right here. So this is going to be our breakout level. But for me, with this setup, right, I trade the reversal, so I'm going to be catching a lot later of an entry. Um, this is similar to how we would actually draw the continuation pattern. But in this case, we're actually not really going to be using some type of flagpole. We actually kind of will, but it's actually going to be from the W setup. So the way we would draw it is we would first have to identify the W setup or inverse McDonald's, which would be right about here. And then this is where we actually would like to draw our flagpole almost. So this is, like I said, we're going to use the same method, right, of duplicating the flag, some type of pole or some type of move to determine our target. So if we were to look, where is our impulse move starting from? So we see that, yes, we have a little bit of dip here, but right, remember when we look at continuation patterns or reversal patterns, it's going to replicate its previous move. So if this is going to be the breakout, we should be grabbing the pull from over here, right, as we would look for a continuation. So our flag pull actually would start from right here, right? And remember, we're going body to body. So it would start from right here, bring it down to its previous body, right? And then take a look again, right? We have 3 consecutive white candles or 3 consecutive green candles right here. So then we would duplicate this move, bring it up all the way to the top of the breakout, depending on where you draw it, but you could see where do we hit before we start seeing some pullback. It's pretty much perfectly right at the top, and then you see that we kind of reject it right here. Do you guys see that? So we drew the W pattern, right? we captured the impulse move right here from the right W, I guess you could say. Um, duplicated it, moved it towards the top, and then we could see that where do we hit? We pretty much hit near perfectly towards the top of the target, and then we start to see a pullback. But then again, we actually can look to hold this as well, as all this is right here. This is just a back test, right? This is a break of structure right here and a back test into support. So what was once initial resistance got flipped to support. So technically you actually can continue to hold this and look for a little bit more of a move up. But you can see we drove pretty much perfectly straight up to our target, which is going to be at that 82 level. And then, yeah, how would we determine the R to R? For me, a lot of times we're going to already be identifying the potential double bottom or the potential McDonald's setup. So you really could take, an entry anywhere at these lows. For me, I would probably have an entry, somewhere about here with a stop loss as a newer 5-minute candle low. So probably a candle close below this, like, I don't know, maybe 400 level, 17,400. So maybe bring it down a little bit. And then obviously our R to R is going to be up to our duplicated pole, which is going to be about right here. So if you take your entry over here on this initial candle, right? Like I said, your stop loss probably is going to be a candle close below this 400 level. And it is also going to depend on what time frame you're looking at this, right? So if you are on a 30-minute structure, right, you need to have 30-minute stops and 30-minute drawdown. So, you do want to keep that in mind. So you may want to flip to a smaller structure, maybe like the 15-minute or something like that. But yeah, once we got our entry in, like I said, our targets are going to be up towards the duplicated pole, which is going to be to the top of pretty much 80. But because we have such a good entry and our R to R is really, really good, our initial trim actually is going to be a back test into the previous high, right? So we would target the high of that W setup. We will close half of the position there, and it will move our stop loss to break even or in profit, and we would let the other half ride out towards our final target or wherever we see, best. But yeah, I think in this case, I don't know where my view up is. Do I not have view up? Where's my view up indicator? Okay, I guess I don't have view up, but yeah, you'll probably, look to use view up as a potential target, maybe if it was like curling around here or something like that. You could use those as potential trim areas or even full take profit areas. Okay. And that would pretty much be that with the inverse McDonald's. And let's go see if it actually works out twice with the one right here. I think we had one, yeah, literally right here. So let's see if this works out as well. So I believe this probably is a 15-minute structure on that McDonald's one. Yeah, looks like a 15-minute. Was it right there? Yeah, it was. Okay. So with this one, same exact idea. So you would have your neckline, which is going to be right about here. Same exact thing. We actually have a 15-minute fair value gap right there. We would draw out the McDonald's setup. So this, 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 right? Find our impulse move. Where is our impulse move? Looks like it's actually only going to be 2 candles this time, which is going to be from here to there. So we would draw that out. Actually just take it from here. So start at the low right here, and I'll draw it out to the high of this candle, right? 2 impulse candles. We're going to duplicate that. We're going to bring it to the top, dotted line, and we pretty much do come up to that. We do come up to that target eventually, but you can see right here, we are just shy of it depending on how you draw it. Um, but for the most part, yeah, this would be the breaker right here. And technically you are supposed to hold. And this is actually a mirror structure from what we had over here, right? We got that breakout initially, and we got a back test for a push higher. Same exact thing right here, right? Just on a smaller scale. We got that breakout above, initial resistance. It then got flipped into support, and then we used that support for another leg higher, which would then allow us to hit our actual final target at the top right there. You guys,
Alex, in this example, where will be your entry? Because you look at the second leg of the W setup, the
hmm
impulse move.
yeah,
Okay. So if I want to take a risk, and then I probably will take the entry in the close candle of previous red one,
hmm
but but that doesn't look nice for me. That doesn't look correct for me if I take the entry there because you can see the massive down candle and
oh yeah,
basically overtake the previous two swing low
hmm
and also the previous low before 6 o'clock.
yeah.
6 a.m.
So in this
Yeah.
case, right, technically the setup actually is not even going to be valid, right? I actually wouldn't have even looked to take an entry just
Yeah.
based off this 15-minute structure, right? So in this case,
Mhm.
right, we're gonna have to do exactly what we did, or what we probably should do with the previous structure is wait for this actual bottom to form and confirm that, okay, there is continued buying still coming in, and that's when we would want to drop to the lower time frames and look for an entry, right? So let's actually do that. We'll maybe hop into a 5-minute time frame here, come back to that exact setup. Let's see if we get anything. It doesn't really look like we have much, but what do we actually have here? We have a bear flag. So technically, if this is correct, we actually still could position ourselves for an entry there, but looks like this would need to be a 1-minute entry because the 5-minute is quite strong here. Yeah, it doesn't even look like we got a back test, but here actually could be your entry under the 1-minute setup. So your stops here, or your entry, would be on this back test, right? We have a 1-minute fair value gap right here on
Mhm.
that impulse move up. Get that back test, take your entry right here. Your R to R is going to be a 1-minute candle close, or you could even probably have a hard stop at this low. Actually, this is actually kind of wide, I'll be honest. So I actually may not even look to do that. I would actually probably just have a 1-minute candle close below this fair value gap. So about that, something like that. And then you would look to ride the wave on the larger time frame. So you're taking a almost a 15 to 30-minute structure, but you're using a 1-minute entry and 1-minute R to R technically. So you would have a 1-minute entry right here with your stop as a 1-minute close. So technically your risk is very minimum, as that would get invalidated really quickly if it didn't want to play out right there. Right. So that would be the setup right there. Just waiting for that confirmation to see if buyers are coming in, because remember, just because we got this kind of move up right here doesn't mean we're going to continue higher, right? All this could have been on the 5-minute was just a break and retest the structure, right? We got this initial flag pull, consolidated, broke out. What happened right here? We got a back test into the flag, and we still closed below it, right? So we technically could have just continued lower here. But because we are under a 1-minute setup, right, we're looking to see if whether or not buyers are going to be present in that situation, right? If they are, right, they will most likely drive that move up, which is kind of like what you see here. And if they're not, right, if this was a break and retest for another leg down, right, just 1-minute setup would have got invalidated, and then we most likely would have pushed for a new low of day after that. Does that make sense?
Yes, yes.
Cool, cool, cool. All right. And I think that's pretty much it from me. Yeah, we're about 12:30 here, so yeah, if you guys have any questions on this setup or really just want to ask me anything, feel free to let me know. But yeah, I think that's pretty much it. I guess we didn't even cover what I wanted to talk about, but I guess some of your guys' questions did get answered, hopefully. When it comes to just looking to draw my structures and whatnot. But yeah, for the most part, right, you can see that duplicating that flagpole or just like the pole in general, right, it really does work. And we eventually do gravitate towards those targets, even though it may not be in a straight just one go, right? There will be obviously some pullbacks in there, but you know, in those situations, that's when you're really just gonna have to, manage your stops, right? Adjust your stops, um, and then, set your realistic targets, right? So just because you you have a crazy big flagpole, like, I don't know, let's go maybe to like the hourly time frame. So maybe you are looking at, I don't know, this hourly bear flag, I guess you could say. Maybe you're looking at this hourly bear flag, right? And then obviously we have a bear flag structure kind of like this, right? Realistically, if you're taking an entry on this hourly setup, right, you're not going to be holding for 1,000 points or like 700 points, right? That's not realistic at all, right? So there is going to be external factors that come to play when you're looking to, use this particular strategy. But for the most part, this can be just used as, some type of extra confluence, just to see, if it will line up with your overall target. Maybe you're using your target as like VWAP, or maybe like 200 EMA, previous high of the overnight high, right? This could be an extra confluence to tell you that, okay, we should be looking to hold towards, this level if the duplicated flagpole lines up with that. Okay. All right, and I think that is pretty much it from me. So yeah, if you guys don't have any questions, that's gonna be a wrap. And then yeah, hope you guys enjoyed today's class. I will upload it to probably the YouTube channel if you guys want to ever come back and watch this. But yeah, I think that's pretty much it. So like I said, hope you guys enjoyed today's class, and then yeah, we'll pick things back up next week on Friday, and then we will also be live trading next week as well. So, yeah, that's pretty much it for me. So, hope you guys have a great weekend, and I'll see you guys next week then. All right.
Yeah, thank you very much.
All righty. Cool.